It's the year end, a great time to look at the year ahead now that ICICI Direct's Technical Yearly Outlook report is here. Here we bring you 10 key insights from this detailed report prepared by ICICI Direct's research desk. If you'd prefer a detailed breakdown of the report, you can check out the longer conversation with Dharmesh Shah, the link to which you can find in the description below. Based on both classical technical analysis and statistical analysis, our research team estimates that Nifty is likely to shrug off its bearish vibe and shoot northbound to 28,800 with the key support set at 22,000. The index has bounced from the low band of 2 years rising channel, which is now exhibiting solid buying demand at an elevated support base. But there are many more reasons for this 28,800 estimate that are outlined in this report. We'll touch upon a few of these ahead. Since its inception in 1979, Sensex returns for each decade has been 4 times the median value. Based on the decadal theory, which helps investors form a macro perspective on the market, our research team estimates that Nifty could end up at around 55,000 by 2030. And bear in mind that Nifty opened the decade at 13,892, so we've already covered some good ground. With a target of 63,000 for the year ahead, our research team expects Bank Nifty to outperform Nifty. This is largely due to the support witnessed at the lower band of the 2 years rising channel, which coincided with 52-week EMA. Expect the Bank Nifty index to undergo base formation and motor along to 63,000 with key support at 48,200. As per our research team, midcaps are projected to outperform the benchmark, and they've set the target for Nifty Midcap at 72,800. You see, in a structural bull market, midcap stocks don't fall more than half of its previous gains, and after that, they often bounce back with similar force. Since March 2023, intermediate corrections in the small cap space have been limited to 15%, after which we've seen new highs. In the current scenario, the index has rebounded after a 12% correction, and the running breakout from decade-long resistance trend line signifies an improvement in the broader market. Our team expects the Nifty Small Cap Index to head towards 23,000 next year. One handy way to gauge market sentiment is by looking at the percentage of stocks above their 200-day moving average, which tells us how many stocks are trending upwards. Right now, the percentage of stocks above their 200-day moving average stands at 62%. Last month, this figure hit a low at 42%. So, clearly the market sentiment has improved. That's right, global broader markets are showing strength. Be it Russell 2000 of the US, Stoxx 200 of Europe, or Topix 400 of Japan, as the weekly charts for all indices suggest there's a rebound coming. And guess what? Historically, Indian equities have rallied in tandem with its global peers through each bull run, displaying strong positive correlation. This one may seem counterintuitive, but stay with us. Based on the trends of the past 3 decades, if FIIs sell securities worth over Rs 30,000 crores in a quarter, Nifty tends to rally in the 12 months following the outflow. In fact, Nifty returns in such 12-month periods average 28%. And not only that, FIIs return to the Indian markets in most cases to join in on the rally. On analyzing the last 7 election cycles in the US, our research team identified the interesting pattern that broader markets tend to outperform in the year after an election, offering average returns of 23% in such years. On a positive note, the Indian midcaps have displayed strong correlation with global peers. Nifty 500 has rallied 32% in the years post-US election. We've saved something cool for the last one. Using our in-house sector rotation model, in combination with time-tested trend identification parameters, our research team has segregated each sector into specific buckets. As per their analysis, Bank Nifty, capital goods, and financial services have been identified as outperformers, while metal, power, FMCG, PSU banks, and PSE have been listed as bargain buys. So, those were the 10 insights from the Technical Yearly Outlook report. But as promised, here's a little surprise for you. Exclusive stock picks curated by our research team. We hope you found this video interesting and informative. For more such content, watch this space. And in case you haven't already, like this video and hit that subscribe button. Happy investing!
Investments in securities market are subject to market risks. Read all related documents carefully before investing.